What if I told you a narrow strip of water, barely visible on the map, could shake the entire global economy? Every day, more than 20 million barrels of oil pass through one place. That's nearly 20% of global energy supply. Now imagine this. That place is no longer stable. Missiles, drones, military escalation. And this isn't theoretical. This is happening right now. But before we continue, let me explain something. This episode is about one of the most important maritime choke points in the world, the Strait of Hormuz. How can a narrow waterway move oil prices? How can it pressure the US economy? And how could closing it push the world toward an economic crisis? These are the questions we're breaking down today. My name is Cypher, and this is Decode World Order. This is not news. This is analysis. Let's begin. The Strait of Hormuz is not just a shipping lane, it's a global bottleneck. Nearly all Gulf oil exports pass through this corridor. Saudi Arabia, Iraq, UAE, Kuwait, Iran, all depend on it. And the problem? There is no real alternative. Yes, pipelines exist, but they handle only a fraction of exports. Which means, if the strait stops, the world has no backup. Now add military tension into this equation. Ships face risk, insurance costs surge, shipping companies hesitate. And suddenly, the strait becomes unstable. The Strait of Hormuz doesn't need to be blocked. When ships refuse to pass, and insurance becomes impossible, the result is the same. The strait is effectively closed. The first reaction? Oil prices surge, gas prices rise, shipping costs increase. Markets react immediately, and inflation begins. Because energy sits at the center of everything. Transport, manufacturing, food production, all depend on it. When energy becomes expensive, everything becomes expensive. Now here's where it becomes political. Higher oil prices mean higher gasoline prices in the United States, and fuel prices are extremely sensitive. A sharp increase pushes inflation higher, forces central banks to react, slows growth, and pressures political leadership. Asia depends heavily on Gulf energy. China, Japan, South Korea, India all rely on shipments through Hormuz. Any disruption slows factories and raises costs. And when major economies face higher costs, they pass them on. Products become expensive, supply chains tighten. Global inflation spreads. If escalation continues or the strait fully closes, we're not just talking about higher oil prices, we're talking about global slowdown, supply chain disruption, energy shortages, market instability, and possibly a global recession. The Strait of Hormuz is no longer just geography, it's a pressure point between war and the global economy. The question isn't whether the world is affected. The real question is, how far will this shock spread? My name is Cypher. Subscribe for deeper analysis. See you in the next episode.